How much can we put into retirement, and what type of plans give the highest contribution level?
Oh, this is a great question. So it's really hard to give you how much you can put into retirement because there are a lot of different brackets that you can fall into. There are brackets that are down in the around 7,000, 8,000 range if you're doing it through yourself personally. There are business brackets where if you're an employee, it can be up around 25-ish. If you're an employer, you can even get up into the $60,000 to $70,000 range, even up to the 80. Those are for your 401ks and IRAs traditionally. Those are more defined contribution plans that are at those limits. But if you look at a defined pension plan or benefit plan, something more along those lines, they're usually higher, somewhere around 466,000 up to even 500,000 in some cases. So if you want to get the maximum amount put away into retirement, you really want to be looking at those defined benefit plans that are really more the pension type plans, which are the cash balance plan, the 401(e)(3) plan, stuff like that. It would really be where you'd be looking.
So can I ask you a couple follow-up questions about that?
Yes.
So who is a solo K or a SEP that, is going to potentially enable us, depending on our income, to contribute a little over $60,000 a year to? Who does that fit?
Yeah, that fits somebody that's owning a business typically. You're looking at doing the employer and employee contributions into it. So your S corporation owners that own 2% or more of the business, your sole proprietors and your partners in a partnership, stuff like that.
And is that better if I'm just an owner without employees, or does having employees matter there?
That depends on how much you're willing to contribute for your employees as well. Most of these plans require some level of sharing with employees. The cash balance plan and the 401k profit sharing plan are the two that probably give you the most flexibility on discrimination against employees.
And what about a defined benefits plan? Who's that good for?
So defined benefits plan, there are a vast number of those. Those include the IRAs, the SEPs, and all those. The defined benefit plan is, I'm thinking defined contribution, Defined benefit plan is the pension style plans where you're doing the cash balance plan, the 401(e)(3), stuff like that. And those are usually for people that are making a lot of money in the business and just want to be able to put a whole lot of it into retirement. So I usually see those come into play, people with 500,000 plus.
And if I do that, does that now also have to open up to employees, or can I do that just for myself if I'm the owner?
It does have to open up to employees, but if you do the cash balance plan, it's one of the ones with the most discrimination against employees.
And another question, let's say I have a business A with employees. Is it possible to have some type of a parent company or another company that money moves to that I don't have employees, to avoid having to pay them the defined benefits as well?
Typically, unfortunately, no. There are some laws that require some, if you have businesses that are primarily owned by the same people, you usually have to have that retirement account spread across all businesses.
So lots of options, and I think a lot of people don't realize that $60,000, even $100,000, $200,000 type contributions are possible depending on how things get set up.
Yeah.
So some tremendous opportunity there. If you're not taking part of some type of qualified contribution, I would highly recommend you do. I remember my own personal story with this. I thought I was capping out what I could contribute at $15,000 or $16,000 a year, and it blew my mind when I found out that I could have at the time been contributing over $50,000 a year, and it was just because I didn't have an accountant that would point it out to me. And those are the kinds of things that we want to point out to you to help you get on track now. Man, that would have been a lot of additional money working for me, which would have been great. So,
yeah, another thing we frequently think about, there's the difference between the traditional account and the Roth account. And just so you're aware, there's a lot to consider going into that. One is, if you're taking advantage of the traditional account, you're saving money on taxes today. But down the road, you are paying that tax. Whereas if you're doing the Roth account, you're paying tax now and saving it down the road. And usually when you get 5 to 10 years out, that Roth account starts giving you exponentially higher savings than the traditional account will. However, that doesn't mean you should avoid the traditional account. I would recommend looking at a book. I can never remember what the name of it is, but it's basically talking about the zero tax game, where your whole goal is to pay zero tax in retirement and really minimize your tax now. And it's talking about there are a bunch of different theories out there on how to do it. But we look at doing a hybrid between the traditional and the Roth accounts. So you've got the taxable funds to draw from up to typically your standard deduction, coupled with the Roth accounts to draw from to give you the rest of the income you need.